Hello and welcome to Investing Confidential. There's been a lot of talk the last few days about stock buybacks, what Warren Buffett said, all of this, talking heads, CNBC. Well, let me tell you something. They all got it wrong. Okay. What did Warren Buffett actually say? Again, we got a lot of misinformation out there, and I'm going to show you exactly what he said and what he meant by what he said. Because certainly what he said was what his statements were manipulated as usual with the news media, et cetera. So stay tuned for that. But first, let me talk about stock buybacks in general. There's a lot of misinformation about stock buybacks. Certainly, why companies buy back stocks. Why is it controversial? So let me tell you, my perspective as a fund manager who obviously invested a lot of companies over the years who bought back stock. Let's talk about the main reason why companies decide to buy back stock. It comes to really what they call capital allocation. So companies that generate a lot of cash or are doing very well, a lot of earnings, a lot of cash, they have this cash in the balance sheet, and they have two things. They could do two things. They can grow organically, invest in their own business, build plants and infrastructure, or they can do M&A to grow the company. The third option is on this capital allocation is return money to shareholders. And there's really two ways to do it. There's pay dividends or stock buybacks. So why would a company decide to do a stock buyback? Well, first of all, they say, okay, we're sort of tapped out. We can't make a return on putting in a new plant, putting in new operations, buying, hiring more salespeople. So that's out. Are there any acquisitions out there? Maybe it's too expensive. Maybe there's nothing they could buy. Okay, so now we have all this cash. What do we do with it? And so let's give it back to shareholders. Do we pay a dividend or do we buy back shares? I think the sort of turning point for stock buybacks came during the crash of 1987. And when the market crashed, meaning the market was down 22% in one day. I mean, think about the S&P or the Dow being down 22% in one day. That's the way it was. It was a disaster. We had the most stock buyback announcements ever in the history of keeping track of this stuff. So at the close of October 19th, Monday, every company basically announced a stock buyback to try to, obviously stop the blood. So what happened was that stock buybacks was a tool when your stock got killed or the market got killed to basically help shareholders by buying back shares. And if you buy back shares at a certain valuation versus buying another company, or it's economically feasible. So that's why stock buybacks, all of a sudden became in vogue with the 87 crash and the volatility in the markets. People started allocating money to buy back shares because it was cheaper than buying other companies or investing in plants and equipment. That's the base. Everything changed when you had instituting this whole idea of executive compensation during the mid 80s till today, right? So that's a controversial thing today, but it wasn't back then. They say the idea was, hey, you have an executive, all these high-level executives, let's put them on the same line as the shareholders. So if the shareholders do well, they do well. So executive compensation became linked. The problem was that when the CEO realized that his compensation was based on movement of the shares, okay, people started saying, okay, the board, hey, listen, if we get the shares up, we make a lot more money. So people like Harvard Business School, as you can see here, they became champion of stock buybacks. Okay. But unfortunately, what happened was that stock buybacks got bastardized. They were used essentially to have been used over time to manipulate quarterly numbers and Wall Street. Okay. Wall Street's complicit to this, right? How does that happen? You have 1 million shares outstanding. You buy 10% of the float back. If you report flat earnings, but because you have less shares outstanding, your earnings per share are higher. So you can beat Wall Street estimates. Wall Street says you're going to come in with 20 cents. You come in at 21 cents or 22 cents. Whoa, your stock goes up. Everyone's happy. That's what they call financial engineering. Okay, that's essentially what it is. Beating the game, beating the street. Okay, using stock buybacks, and that's what they do. I'm sorry to tell you, I may get some shit from people. I don't really care, but that's the reality of the majority of stock buybacks, because at the end of the day, okay, you have companies recently, okay, and I'm going to show you some example companies announcing stock buybacks at all-time highs or 10-year high, 20-year highs. That makes no sense. I don't want to use them as an extreme example, but you look at Apple, okay? Years ago, Carl Icahn got involved in Apple, and this is obviously after Steve Jobs passed away, and told Tim Cook, you need to buy back stock. And because Tim Cook is not an innovator, Tim Cook's a very good manager, but he's no Steve Jobs. Okay, what was the last thing Tim Cook innovated? Nothing. He decided, okay, well, maybe I'm going to listen to Carl Icahn, and so Apple has been buying back, billions of dollars of stock over those years, and it's worked out. Now, the other issue that people don't talk about, especially Wall Street, is that the markets are illiquid now. Okay, I'm sorry, the markets are illiquid. It doesn't take much to move a stock. It doesn't take much to manipulate a stock. So why is this bubbling up today, right? See, late last year, Elizabeth Warren came out about stock buybacks and the CHIPS Act. Okay, I actually agree for the first time. I'm not a big Elizabeth Warren fan, but I agree with Elizabeth Warren. If you're going to take all of this incentives, you got to use it to build semiconductor plants. You can't use to buy back stocks. I agree with that statement. Then you got, obviously, the oil companies. Here you got Exxon declaring massive stock buybacks. You got Chevron here declaring massive stock buybacks because essentially they lost money for a few years. For whatever reason, there was a boom in oil prices, and they made a fortune, and they're buying back stock. Okay. Now, Joe Biden came out and made an issue of this, and his solution was to put a 1% tax on stock buybacks. That makes no sense. Okay, it's not going to stop anything, but neither does what Exxon does. Here's a 10-year chart of Exxon. Okay, basically they declared a stock buyback, as you can see here at the top. All-time high valuation. No one can tell me otherwise. Does that make sense? I'm sorry, it doesn't. I'm sorry. Exxon should pay out big dividends or invest in something else. They shouldn't be buying back stock at a 10-year high. This is not what the essence of stock buyback should be. Okay, that makes sense. So this week, everyone's making us think about Warren Buffett, that he made a political comment that you don't know what you're talking about if you talk against stock buyback. You're financially illiterate. That's what he said. That's what they said he said. But the reality was, this was not a political attack at all. Okay, this was Warren Buffett talking about what really stock buyback should be. Let's look at the facts now of what Warren Buffett really said. So here is the excerpt of a page from the 2022 letter to shareholders. If you don't read the Warren Buffett letters to shareholders, you should. Okay, these are outstanding. You can get back copies of them. I would recommend anyone who's interested in the stock market. Is almost a must read. Okay, so let's look at these 3 paragraphs. This is exactly what Warren Buffett said. Okay, and obviously his whatever he said was manipulated. But let's talk about it. So what he's talking about here is businesses. Every small bit helps. If repurchases are made at value accretive prices, okay, at value accretive prices. That's the key word here. Just as surely when a company overpays for repurchases, okay, buys back stock at the wrong price, the continuing shareholders lose. So what he's basically saying is, if you buy back stock at the right price, meaning when the stock is low, okay, it's value accretive. That's of low valuation, it's value accretive. But if you overpay, if you buy stock at the wrong price, shareholders lose. Okay. And then continues, at such times, gains flow only to the selling shareholders and to the friendly, but expensive investment banker who recommended the foolish purchase. So what he's basically saying here is that people like Exxon or even Apple or others who are buying shares at just outrageous valuations, manipulating their stocks higher, their executives are benefiting, their large shareholders and executives are benefiting, the investment bankers are benefiting, but not every shareholder benefits from that. Okay, not every shareholder, because over time, this doesn't work. Now, if you're an Apple shareholder, you're going to say, oh, Screw you, pal. Okay, great. That's an odd and an example, but I'm talking about conceptually speaking. You have to make these purchases. This is what Warren Buffett's saying. Okay, let's go to the next paragraph. Gains from value accreted repurchases, it should be emphasized, benefit all shareholders, all owners, in every respect. Okay, and then he goes into example I won't talk about there. But then the final paragraph here, the final pointer says, when you are told that all repurchases are harmful to shareholders or to the country or to particularly beneficial to CEOs, you are listening to either an economic illiterate or a silver-tongued demagogue. Now, was he directing that to Joe Biden, Elizabeth Warren? Maybe, maybe not. I don't know. I don't know what's in Warren Buffett's head, but certainly I would not make that assumption. But the bottom line is he's not saying that if you don't believe in stock buybacks, you're wrong. No. He's saying that stock buybacks done at value accretive prices makes sense. But if they're not done at if they're done at expensive prices, only a few people benefit, and they don't benefit all shareholders over time. Okay, that's what this controversy is all about. It doesn't make any sense what CNBC, people on Twitter are saying. Warren Buffett's basically saying, buy back stock at good prices, benefits all shareholders, but don't buy back stock at high valuations. Makes no sense. That to me is common sense. And that to me, it should be an investment philosophy. Buy low, sell high. So for all you investors, buy low, sell high, and be careful out there.